U.S. stocks rose to record highs as investors chewed on a stronger than expected quarterly report for the U.S. economy ahead of the Federal Open Market Committee's monetary policy decision next week. Positive earnings results from several major companies helped support the three major equity indices. Leading the way was Google, up 10% in the last 30 minutes of trading. And given the stock move for AbbVie, I trust the earnings were good for AbbVie also. Moreover, I hope all went well for our viewers and subscribers invested in AbbVie. And with temperatures rising across the country, I also trust that everyone is staying cool these days. So let's go to the charts and see how the outlook appears. But remember, with the Fed meeting next week, their decision can throw the market into a tantrum. So be careful. We're going to look at two charts today, beginning with the 2-year weekly on the spiders, and then we'll move to the 6-month daily on the spiders. But starting off here, we had the bottom in late 2018, and then that move made it all the way to this level here in late April. And then we had a decline down to this level, and then all of a sudden the Fed started talking about easing. So we had an immediate turn and this secondary move up to the current level here. Now this secondary move is not as strong as the primary here, and you'll see that in the MAC. Looking at the MAC there, of course, that's the bottom, and that's the top of the first move. We started to decline, and then the easing talk came in that level there. And then, of course, we reflected off and headed on up here. But you can see that the fast line is not accelerating all that strongly above the slow line. Certainly much weaker than the primary move here. So we just have to watch what's going to be happening here. Right now, the weekly, in my humble opinion, does have the power. Not much has changed in the monthly. That's why we're not looking at it today. But you will see in the daily when we get to that there's a little bit of yellow flags, caution flags that are showing up in the daily. But we'll see that here in a second. And you can also see through the histogram that this current move there is certainly not as strong as it was up here at that level too. Also, price rate of change, same sort of thing. Don't like the fact that the fast line has come down through the slow line and we're coming up from below. That I don't really like, but it's not a big deal. Moving into the RSI, we're at a moderate level, 67.90. We still have that overall downward trend. I'd like to see the move further up here, maybe into the 80 level to kind of break that trend. But until then, that's giving us a bit of a caution flag as well. Stochastic is moving on up. Not much we're going to be able to read from that. I do detect a general downtrend in the volume, and that's never all that good. But it's not significant at this point, but it's something to keep our eyes on. Williams looks fine. We're doing some sawtoothing up here in this overbought territory, but it looks fine for now. So back up to the price chart. Take one last look at that, and then let's go to the daily chart. And we're looking at the 6-month daily on the spiders. And as you can see here, from that bottom in late May, early June, we moved on up, crossed through the 20 and 50 EMA, and then we've trundled along the 20 EMA all the way through to the current level. Not all that dissimilar to the primary move that started back in late December. And you can see that we trundled along the 20 EMA just a couple of times. It popped through, but not a real big deal. But what cautionary flags I'm seeing in the daily chart are some divergences. So let's go take a look here at the MAC. We had the fast line cross through the slow line here, and we're coming up from below. I don't like that. It did that here in the March and April time frame, but as you can see, things did peter out here by late April, and then we made our move down. So what happens is when the fast line does move on to the downside, of the slow line, things are starting to break down. So it isn't significant, but it's something to keep our eyes on. And we see some divergences also say here in the histogram, a general downtrend there. You see the same general downtrend with the price rate of change at that point there. And you can see it here in the RSI, just barely, but it is a downtrend. So these are cautionary flags that we need to be mindful of. Stochastics looks fine, nothing significant wrong about that. And then again, the volume, the general downtrend in the volume, something again cautionary to keep our eyes open, make sure we're not going to get fooled. The Williams looks okay. It's a sawtoothing here, and that looks fine. Moving on back up to the price chart. In my opinion, without the Fed meeting next week, I would say that things are starting to break down. So certainly not a point in time to be putting a lot of new money at work. Let's just wait. Let's just be patient. So there are some cautionary flags out there. So be careful and stay cool. And for today, that's ChewDog Charts. Thank you.